again. We are today here with another video, and I wanted to talk about the trade I took again on on the US NAS 100. So the first thing I want to tell you guys is how I even got into the trade and what I did to understand the direction of the market. So the first thing I did was I noticed on the 30-minute time frame, which is what I use for my standard structure, I noticed that I zoomed all the way out, and I noticed that overall structure is downwards. So we have a high, a low, a higher low, a lower high. And now, before I zoomed in on the 15-minute and I noticed we had this break to the upside, breaking one of these previous structures. And usually when that happens, it's not just going to go completely up before going down, right? So what I did was I knew it was going to come back down before going up and breaking out of that structure. So if we go to the 5-minute, 15-minute, I saw a supply zone on the 5-minute that I was interested in, and it was this zone right here. Now I can actually replay this. Let's see here. Oh, I found it, guys. So I just have to play this, and boom. So you see what happened. I know it was kind of fast. Let me do it again. I saw that zone right there. It broke structure right here on the black candle, leaving that fair value gap. Press play, plays, hits the gap, and smashes my take profit. Now for the take profit, what I used for the reason why I targeted there was this was like a bank. I call these little bank levels. I targeted this area here. That was once a support and once a resistance, and then because that's what retailers do, they trade in those things. So I use that as my take profit when I'm trading smart money. So I used that as my take profit, and I entered off of this 5-minute fair value gap / imbalance gap / supply zone, supply and demand. And the first step, like I said, is I had structure. I went on the 30-minute chart. Overall structure is downward, so I knew eventually it's going back down. Even though I originally thought it was going to come up and go down within this structure, but instead it broke this previous high. So what that means is it's going to actually come back into the range before going up. And I knew that, before it reached to the point where it's at right now. Okay. Let me finish playing it. So yeah. So after the trade, it kept going, and then I actually entered another micro trade on NAS. Let me just zoom in here. I entered another. I know it's all messy and shit. I got lines and shit. I entered another micro trade on NAS because I saw another distribution, another supply zone here, and I saw some liquidity. So I entered here, and then boom. I know it looks kind of awkward because I didn't enter right there. I know you can't tell where I entered. I didn't enter right there. I entered over here. That's why it looks all weird and wonky. I was kind of just using the risk to reward tool as just a quick box. I quickly entered that trade. But then, let me see where the play button is. There we go. And then it smashed my take profit. And I wanted to do it again, but I realized that I was going to go back up because I saw this liquidity still here, technically still valid. So what price ended up doing was it just kind of reversed and went back up, which is completely why you want to have good risk management when you're trading, guys, and you want to make sure you're doing the proper steps. So in case, like for example, if I didn't have risk management right there, right, the market would have kept going up like it's going up right now. You see? If I didn't have any risk management, the market would have kept going up like that. And I would have lost my whole account. And that's why it's important to have a stop loss, guys. Because what if I entered the trade right there on NAS and I didn't have my stop loss and I went in the other room for like 10 minutes or some shit, and then boom, because this is a lower time frame trade too, so that's extra volatile. I could have just left and forgot about it and took my whole account. But that's what I'm saying, guys. It's just supply and demand and market structure. And I also trade Wyckoff if you're not familiar with that. But I'm still expecting it to go down, despite it breaking that structure because of some fundamental data I have and some price action, which is this liquidity and shit, and this distribution up here. But I'm gonna see if I can get a sell here on NAS, and hopefully we'll sell eventually But for now, guys, yeah, I just wanted to get on video and talk about that trade I took over here. It was simple. The number one step is market structure, and the second step after market structure is you want to identify. Sorry, hold on. Market structure on the 1 hour and the 30-minute. It does depend on the pairs. Some pairs have, like, for example, U.S. dollar, Japanese yen. I'll give you some value. That pair moves slower, so you can actually start structure from anywhere from the, I think, what was it, the 30-minute and below. So 15-minute, 5 minutes. Just 5-minute structure is also valid because Japan moves so slow. So 5-minute on Japan, but 1 hour, 30-minute on every other pair. You can do 5-minute on the Swiss franc too. So market structure. Then you need to identify supply and demand. Okay, you want to identify supply and demand areas / zones, and after that, you want to wait for price to come to these zones. Then after you wait for price to come to the zones, you want to wait for a reaction. It's particularly a smart money reaction. So hold on, I'll show you that in a minute. Wait for a reaction. Okay? So we had step 1, which was market structure. We had step 2, which was identify supply and demand zones. We had step 3, which was wait for price to come to these zones. And we had step 4, which was wait for a reaction, okay? And so what I did was market structure. I identified my supply and demand zone, and I waited for reaction. I had to break a structure after that zone there. It came before. Then I was like, okay, so now that's a valid. Now that I knew that was a valid zone, because I saw the actual gap. If you're wondering, I saw the actual gap. A little bit, like a couple minutes after, what's it called? This wick right there. And then it dropped, and then the second it dropped, leaving that space for the wick, I already can tell it was about to break this structure. And so I was like, oh, that's probably going to be a gap. And so that's basically an example of waiting for a reaction. So yeah, identify your supply and demand zones, wait for price to come to these areas, and wait for a reaction. And let me see one more thing, guys. Yeah, just screenshot these steps here, and I will and I'll draw them for you real quick right now. So those are the steps on the screen. These are the steps right here. Okay, so the first step is your market structure. So say we had some up structure, bullish structure. Okay, so now we have, this is valid structure. You have a low, high, 4 pieces of market structure, which is what I like to go by. Now we identify our supply and demand zone. So the fact that we have bullish structure going upwards with this aggressive price action like we want, there's most likely a fair value gap and order block accumulation, blah blah, below this area. Okay, below the middle of the trend, the range. And the reason why I put a line in the middle is because when you're buying, you want to buy low, and when you're selling, you want to sell high within the current range that you're in, within the trend. Because you can't buy low and sell high randomly without knowing the trend of the market, okay? And we know the trend of the market through market structure because smart money is the only one that can move the market with large amounts of capital. So, I mean, we can move the market too, but I mean really move the market, like create market structure that has aggressive price action. That's done by smart money. So, because of that, we actually look for the lower part of the range for demand zones to take trades off of. So what we would do is, since let's say price is up here, we would wait for price to come down to this area, okay? We would have an alert here. I forgot to write that down. So you can set alerts on TradingView with the Pro plan. Set an alert, or you don't have to set an alert. Just watch it and wait, and come back a couple hours later or minutes. Then once it comes into your zone, before entering off of that zone, wait for a reaction. So what I mean by that is, if we zoom in, the reaction that you would want to see when buying or selling would be a break of structure or change of character. So you would want price to come in here, right, play around, blah, 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 just be in your zone, and then break out like that. You want to see a break. Why is that drawing like that? You want to see a breakout. So once it breaks out like that, you have a break of structure or a change of character, and then you can take, then here and out, you can actually look for your trade within this actual trading range. And the reason why I say that is because we entered the zone, right? Look at the screen. Price came into this orange box that I drew. It came to our zone, and once it came to our zone, what did it do? It broke out, breaking that high that I have marked with the arrow right there. You see that arrow? That high was broken once we entered the zone and came out. So between that high that's been broken, the low that broke the high, and the high, the new high, that's your current, that would be the range that you would enter off of, okay? And it's the same thing as selling. It's the same thing selling. And that's pretty much it, guys. I wanted to make this really simple. You guys can screenshot these notes. And yeah, guys, I hope you guys all have a good day. Peace.